Good morning, Bitcoiners. Hello, and welcome back to your economic calendar. I'm Mauricio Di Bartolomeo, Ledon's co-founder, and as with every Monday, we bring you the news and analysis you need to start the week off right in Bitcoin. Today is Monday, September the 13th, and we have a very special episode for you as always. Last week was a historic one for Bitcoin, with it becoming legal tender in El Salvador. We're going to take a look at how multinational companies are adapting to the new Bitcoin as legal tender law. We're also going to look at the August CPI print that is coming out this week in the United States. We're going to look at some insights and what we can expect there. And last but certainly not least, we're going to look at the bear market in Chinese equities and how that could impact your portfolio. So it's going to be a great one. Grab your coffees. Starting as we usually do with Bitcoin, we see that it was a historic week for Bitcoin, but it was not precisely a great week price-wise for Bitcoin, dropping last week 11.15% at $46,035. And as you can see here from the volume bar here, the spot traded volume was in line with previous weeks. As you can see, this is very much in line with what we've been seeing all the way back in June. However, in the futures market, we did see $3.7 billion worth of liquidations on Tuesday alone. Now, Tuesday was also the day that El Salvador declared Bitcoin as legal tender, and that also happened to coincide with a big bond rating downgrade to China's troubled property developer Evergrande, which we had highlighted here in last week's BEC. And this is an article for your reference, essentially from Tuesday, which was when these big negative downgrades from the bond rating agencies came for Evergrande. Now, Bitcoin did drop by more than 11% on that day. If we just look at the daily chart for Bitcoin, this was the 7th, basically the day of the big drop. And as you can see, the closing for the week was actually pretty similar to where it closed that day. So it never actually quite recovered from that big drop, and it just closed the week right around the levels where it closed that day. Now, the spot volume for this day was the biggest spot volume that we have seen basically since all the way back in July 26th. So there was a big spot volume on the Tuesday, but it didn't really keep up for the rest of the week. Now, checking back in on El Salvador's rollout of their Chivo app, that rollout has not been without complications. As you can see from the article that Bloomberg highlighted last week. Several users have reported some issues with registrations and getting their bonus paid out, while at the same time, many users have also reported that they were able to register, got their bonuses, and are using the app. Now, this is the first time that a Bitcoin app is rolled out to an entire population in a developing country, and glitches are bound to happen. If you focus too much on the implementation technicalities, you could miss the forest from the trees. The move by El Salvador has sparked change beyond its borders, in part impacting large companies and sovereign nations near and far. And we're going to cover that in a second. First, let's talk about multinational corporations. Last week we highlighted that the move by El Salvador would force a lot of these large companies with a presence in El Salvador to have to adapt to this new Bitcoin law. And they did so in style. First up, let's take a look at Movistar, or Telefónica, basically. To tell you a little bit about Telefónica Movistar, based out of Madrid, Telefónica is one of the largest mobile network operators in the world. It is worth over $23 billion and it has 121,000 employees. This tweet from their El Salvador account basically highlights on the day that the Bitcoin law came into effect that clients now had, I'm just going to translate this for you guys. Basically, clients now have the option to discover a new form of payment with Movistar, and they announced Bitcoin, which was very, very interesting. Now, the following picture speaks for itself. And it's basically courtesy of McDonald's. This photo was taken by Bitcoin Beach and was shared via Twitter. And the interesting thing here about McDonald's is that it not only adapted very quickly, it adapted very well. To practically use Bitcoin as a means of payment, McDonald's had to address the high fees of transacting on-chain. and it did so by basically adopting Lightning payments. Starbucks, as you can see behind here, had a similar approach, also accepting Lightning payments, and so did Pizza Hut. As you can see on your screen, both of those images are courtesy of Bitcoin Magazine. Now that these companies have Bitcoin, the next question is, will they sell it, transact with it further, or keep it? We will soon find out in their next quarterly earnings report, which we will be covering right here on the back. Now, as we said earlier, El Salvador's influence goes beyond corporations into sovereigns and mainstream media. Last week, the governments of Honduras and Guatemala, and here's the headline that I wanted to share with you from Reuters. Last week, the governments of Honduras and Guatemala announced that they are eyeing digital currencies for their economies. Now, a central bank digital currency is very different from adopting Bitcoin. Neighboring governments are seeing hundreds, if not thousands, of tourists pour into El Salvador, bringing life to their economy in a time when no one is traveling. There was also news last week out of Ukraine and other countries that are moving to regulate the industry and invite Bitcoin industry participants. Digital currencies in developing countries is a trend that even mainstream media is picking up on. And this was a headline that came out from the Financial Times last week. The genie is out of the bottle and there is no putting it back in. We are going to be looking into a few other macro factors for Bitcoin in our What's Ahead section later today. Checking in on the S&P 500, we see that capital markets had a rocky week last week with all major indices finishing the week lower. We see that the S&P 500 finished the week lower by 1.62% at 4,462 points. The Dow Jones, it's taking a while to load the Dow Jones. The Dow Jones finished the week down 2.15%, and looking at the NASDAQ, it finished the week down 1.36% and down again this morning. Now, as you can see here, the Russell 2000, also which we wanted to check in, had a pretty rough week as well last week, finishing down 2.81%, essentially bearing the grunt of it. During the same week as basically all major indices in the equity markets in the US finished down. Now, what we are seeing play out in the equity markets in the US might be some cautious profit taken given some of the recent market activity in China. Now, let's take a quick peek at that market. The Chinese stock market, what we're looking at here is the MSCI China ETF, which essentially tracks Chinese companies that are available to international investors. As you can see here, let's just do a little quick measurement here. And this market, this index peaked on February 16th this year and essentially went on to drop 32% in the subsequent 185 days. So basically it's been dropping for the last 6 months. And it has somewhat mustered a rebound here over the last 3 to 4 weeks, but it is significantly down and quite technically basically in a bear market, as was highlighted a couple of weeks ago actually by the Financial Times. Now, while the market is not necessarily crashing right now, it's been dropping since February. The issues that are coming out of China Evergrande right now and this troubled property developers are essentially highlighting these concerns, and investors are taking notice. So that might be leading to some profit taking. Now, again, as we were talking about just now, what seems to be stirring the pot right now is this fact that a very large property developer in China, that we highlighted last week, is seemingly on the verge of default, and it has over $300 billion worth of outstanding debt. So again, this could cause some investors to act cautiously and take some risk off the table while this situation continues to unfold in the Chinese markets. It is a quiet week for the Fed as officials are getting ready for the FOMC meeting that is coming the following week. And not too much happening on the corporate earnings front either. We do get a look at inflation with core CPI and basically consumer price index and core CPI this week. Those could move the markets, and we're going to share the details in our What's Ahead section later today. Moving over to gold, we see that gold actually had a pretty rough week last week as well, down 2.11% at $1,787 per ounce. Now, while the macro backdrop is favorable for gold, it did face some headwinds last week by way of a rising US dollar and rising bond yields. This is a headline that highlighted some of that from last week. Essentially, it says gold suffering from exhaustion and a rebounding greenback. Now, if we just check in on the greenback for a second on the dollar index, we see that it actually rose last week by 57 base points, which again, it's pretty meaningful. And it more importantly, it does look like it is essentially forming a base at these levels and looking to essentially bounce off from the 90s in the short to medium term. We also saw some interesting action in the treasury yields with the 10-year yield rising. This is last week's performance. As you can see here, the 10-year yield rose by 1.59%. It's a bit misleading because even though it's a red candle, it's actually it is an increase from where it was previously. So it went up by 1.59%. Now, the yield on the 30-year bond actually went down on the same week. Typically, these yields tend to move in sync, and when they don't, the divergence usually tells a story. What the market could be signaling here is that it believes that inflation pressures will be higher in the next 10 years than over the next 30 years. Let's just open up another interesting headline that came out from last week, and that is consistent with that. As you can see here, the European Central Bank, it says that it is going to essentially slow the pace of asset purchases as inflation soars. What we just saw here in the bond market, like the action that we're seeing play out in the bond market, which is essentially saying the yields in the 10 years are rising, the yields in the 30s are dropping, is consistent with some of the messaging we're starting to see from central banks, which are starting to say essentially that inflation could moderately exceed the goals of the bank or the Fed for a transitory period. So they are basically acknowledging that it is going beyond what they expected and perhaps running for a little longer than they expected as well. So who would have thought inflation may not be as contained or short-lived as many expected. Moving over to our DeFi analysis, it was a rough week for the DeFi index and Ethereum. DeFi index finished down 7.55%. And Ethereum itself finished down 13.80%. However, there was a green shoot in the DeFi space, and yep, you guessed it, it was Solana. And Solana was up 22.62% in the same week, last week, as everything else was tanking. There's been a lot of hype around Solana's recent growth, and that has led to many debating what the industry will look like in the long run, and what will this competition amongst smart contract chains look like in a few years' time. A very insightful musing of how this could play out came from Rune Christensen, the founder of MakerDAO. We're going to pop Rune's tweet here 1 second. So here's Rune's thread, which was very insightful. I strongly suggest you read it, but we're going to basically summarize his thread here because we thought it brought up some really interesting points. Basically, his theory is that there will be only one winner in the smart contract blockchain wars. For example, either Ethereum or Solana. He challenges the thesis of a multi-chain future. A multi-chain future is a future where there's more than one winner and applications interact between different protocols or different chains. To summarize his thinking, basically the bridges between these blockchains can neither be trustless or efficient. And this will lead developers to prefer always building their products on their largest native chain that has the most traction. as they are as sort of cross-chain offerings, like a native Ethereum offering on Solana will never be as good as a native Solana offering or a native chain offering, and vice versa, also the case. So Christensen's musings came as he was considering whether to launch MakerDAO on Solana or continue focusing on Ethereum. And it looks like he will be choosing to stay on Ethereum. Checking in on Solana's relative growth to Ethereum, the respective market shares or respective market capitalizations are at $50 billion for Solana and $391 billion for Ethereum. This means that Solana is now at 13% of Ethereum's total aggregate value. To put this all in perspective, if you combine Solana and Ethereum, they amount to almost half of Bitcoin. So just so that everybody can kind of put some placeholders on how big everything is and how fast everything is growing. Now, another headline worth mentioning from this space relating to the institutional world came from Standard Chartered Bank, and this was a price projection that they published. And the bank essentially, in its report, the bank sets price targets of $26,000 to $35,000 for Ethereum or Ether, and price targets of between $50,000 and $175,000 for Bitcoin. Now, importantly, the report caveats that for Ether to hit the higher band of that projection, for Ethereum to hit the higher band of that projection, Bitcoin must hit the higher band of that projection. So there is no $26,000 ETH without $175,000 Bitcoin, according to Standard Chartered. So there has also been no updates from the futures-based Ether ETF applications yet. Those should be coming very shortly and could provide the next catalyst for the market. Moving over to our Bitcoin mining difficulty commentary, the most recent difficulty adjustment kicked in last Tuesday, also the day that El Salvador, Bitcoin became legal tender in El Salvador, pretty active day, and that brought difficulty higher by 4.54% to 18.34 terahashes. Now, roughly 18.34 terahashes is where we were at a year ago today on mining difficulty. So it did drop quite a bit, but it has come back. Now, hash rate has also remained quite flat since the last adjustment, currently projecting a slight drop of 37 basis points in difficulty for the new adjustment scheduled for a week from now approximately. Now, checking in on the mempool that you have behind your screen, we see that it continues to remain eerily quiet. However, which is, by the way, this is a great thing. But the reasons for this solitude in the mempool recently are actually quite bullish. If we look at the usage of SegWit, basically SegWit block activity, we see that if we compare these two charts, we see that the big drop in the mempool comes right around April mark, essentially. And if we see the big drop, increase in SegWit utilization, it starts right around June. It starts creeping up since April, but it really picks up as of June, which we see, coincides quite clearly with the mempool becoming more empty. And this is great. These are great news because SegWit is basically a Bitcoin upgrade that makes transactions become leaner and is able to fit more of them into a single block. So again, the network is not transacting less, it is simply transacting more efficiently, which is phenomenal. Now, as always, we leave you with what's ahead for the week. We wrap up this week's issue by highlighting two key insights and a summary of economic data for the week. First up, there are some interesting dynamics playing out in the Bitcoin ETF space. Last week, ARK Invest amended the perspective of its next generation internet ETF. It now includes the ability to invest in Canadian domiciled ETF funds. Previously, it only included GBTC. Bloomberg ETF analyst Eric Balchunas believes that this could be the reason, and we're going to switch back to our screen. As you can see in the graph behind you right now, essentially the GBTC is down 22% in the same time period that the Canada-based ETF is only down 6%. That's quite interesting. because what this means is that the GBTC essentially is not tracking the price of Bitcoin so well. As you can see from this line, the Canadian ETF is the red mark, and it tracks the white line pretty well, which is the price of Bitcoin, whereas the dotted yellow line does not do that great a job, is because it has so much overhang from the fact that it has that discount to net asset value. Now, pressure from other competing ETFs, as well as the recent news favoring futures-based ETFs over physically backed ETFs, have put pressure on GBTC unit prices. This trend may continue, as evidenced by ARK Invest. New investors will look to allocate assets for Bitcoin exposure in vehicles that track it very cleanly. Trading the discount to GBTC units up to parity on the expectation that it will convert into an ETF in the future is a separate and distinct trade that not everybody wants to make. Now, second insight that we wanted to highlight was some really interesting on-chain data for Bitcoin that was courtesy of Coinbeast Media. And the charts that you have behind your screen right now highlights that these are the number of addresses, Bitcoin addresses with balances over 1 Bitcoin. As you can see, the number of addresses balances over 1 Bitcoin has pretty much never stopped growing over the long term. And if we look at the number of addresses with non-zero balances, we see something very similar, which is basically that it seems like there has never really been a bear market in the number of people getting into Bitcoin. Now, as always, we wrap up with a summary of the economic data that we can expect for the week. So, on Monday, today at 2 p.m. Eastern, we get the federal budget for the United States. That's released. And of course, there will be a deficit. The question is, how much sticker shock will the public get? Tuesday, tomorrow, 8:30 a.m. Eastern, we get the Consumer Price Index reading out of the US and the core CPI for September. The July reading for the Consumer Price Index was an increase of 50 basis points month over month and 5.4% year over year. The market will likely cheer a number below the numbers that we saw in July, as it will relieve some tapering pressure from the Fed that the Fed is facing. Same goes for core CPI. It had a month over month reading last month of an increase of 30 basis points. So again, the market will likely cheer numbers lower than those in July. Thursday, 8:30 a.m. Eastern, we get a look at the U.S. jobs market with initial and continuing jobless claims out of the U.S. We also get retail sales and business inventories in the U.S. all at 8:30 a.m. Eastern. That wraps up our show for today, everybody. If you have any questions, comments, or feedback, please drop it in the comments section, and we'll answer your questions, include your suggestions in our next issue. If you learned something today, if you enjoyed the show, I welcome you to subscribe to our channel, like it, and share it with your friends.